And welcome back to Dukascopy TV. I'm Monica Gibson and I'm joined in the studio today by Ayoob Rawat, founder of Swiss DataVision, to discuss the benefits and risks of business process outsourcing. Hello Ayoob, thank you very much for coming in today.
Thank you for having me again, Monica.
Now, outsourcing, as we know it, is the passing on, the transfer of some sort of management, whether it's different tasks, to an external service provider. Something that's been quite popular since around maybe the 80s side. But in terms of wealth management companies, what would the benefits be, would you say?
The benefits are numerous for wealth management. As you know, I've been in banking for many, many years, and I'm a very strong advocate of BPOs because I've seen the benefit from the inside, and I've been able to use it to effectively manage costs. So cost optimization is one of the real good benefit. BPO allows companies to really concentrate on growth because by outsourcing, they are releasing a lot of resources to concentrate on growth. Outsourcing allows companies to manage their risk in the sense that any applications, any development involve a certain level of risk. So by outsourcing, you are sharing that risk with the service provider. Time to market is also a very important factor in BPO because you are able to fix timeline with your service provider, and normally they are pretty good in meeting those deadlines, which means that you get the benefit much quicker than if you were doing the process in-house. And other benefits could also be the fact that you have access to permanently to qualified expert in the field that you have outsourced. So as you can see, there are quite a lot of benefits to be gained.
Certainly, and it's quite a broad spectrum, but is there something to lose by giving over that sense of responsibility or that control for certain tasks? What are the disadvantages or the risks that are involved?
They are, yes. It's not always straightforward as it may appear from the first explanation I've given. Obviously, it's got to be well thought of. BPO basically allows a third party to gain access to your process, to understand the way you are operating, to be able to add value. The risks are normally when people outsource, they would think in terms of costs. There could be problem with regard to delivery by the service provider for two reasons. One is because they may themselves miss their target, or as often happens, not often, but sometimes happen, business goes out, which means that they've not only failed, but they cease to be able to deliver. You are transferring knowledge to a third party. Now, transferring knowledge is not something that is done overnight. It requires time and effort. The dependency that you have on a third party can be construed as a weakness.
There are obviously two sides to look at everything, but in terms of wealth management companies and SMEs in particular, why would you say this sort of resource isn't extensively used?
It's for historical reason. Wealth management in Switzerland, at least, has been based on private banking, has been based on banking secrecy, has been based on the fact that clients information are totally, absolutely secure in the hands of the wealth manager. So ingrained in their DNA has been this whole philosophy of I do not share my client's information with any third party. So which means that wealth managers, especially the smaller one, have concentrated in trying to find solution always in-house all the time. Now that is contrary to management of costs, but in fact this is something that has been overlooked because of this obsession, shall we say, in keeping all in-house and not sharing the information. Sharing of the information is contrary to what wealth managers have been used to, but is also now going to be contrary to management of costs, because by keeping all the costs in-house, you are not getting the benefit of BPOs.
It is something very interesting, the debacle between keeping data secure and also then getting the most for the customer. Time with everything is always of the essence. So when, therefore, should wealth management companies look to BPOs?
It's a very good question, but I retort very simply. In any business, when do you decide to cut costs? When do you decide to grow? When do you decide to internationalize and to move on? It's got to be now. It's got to be as soon as possible. It's not something that can be delayed, because the impact is so big on your bottom line that the answer, by conclusion, when I speak to my client, has got to be now. Because it's like any process. Once you start reviewing it in detail, you always tend to put it off tomorrow. But now is the time.
Yeah, exactly. If you delay, then you might miss the perfect opportunity to act now. But if you take into everything that we've considered already, what options are available when you think of who to outsource to?
This is now the key question. The risk involved in finding or missing in finding the right party to outsource to can be detrimental to the business. It's like recruitment for a key position. You would go to specialists on the market to find the best, what we call the best of breed. So if you're going to outsource IT, if you're going to outsource human resources function, if you're going to outsource, accounting, you would go to different parties. You get the same due diligence that you would do in searching a wealth manager or in searching an investment manager is what you would apply in sourcing a BPO service provider. So that is the way to do it, is to go through systematically. There are obviously companies on the market that can assist you and accompany you in sourcing the right BPO service provider.
Well, it is certainly a very interesting topic. Ayoob, thank you so much for coming in and talking it through with us today. Thank you.
Thank you, Monica.
Well, that's all from Ayoob and myself. Please do click back to Dukascopy TV for today's press review and, of course, Commodities Corner. But goodbye for now.